Here are 2 reasons why your 401k could potentially be a ticking time bomb, waiting to self-destruct at any moment upon retirement, leaving you broke with many healthy years ahead. So while your buddies are off playing golf or spending time and money on the grandkids, you're forced to go back to work just to make ends meet, all because you didn't take these 2 things into consideration: market volatility and taxes. I'd like to show you how to implement a strategy that takes advantage of one of the biggest tax loopholes in recent decades and completely avoid this retirement nightmare. This is a strategy that only the wealthy elite have been able to take advantage of until now, and I'd like to show you how. But first, let me explain why these 2 things could be so disastrous for your 401k upon retirement.
Issue number 1, market volatility. Warren Buffett says that compound interest is the 8th wonder of the world, and while it can certainly be a beautiful thing, it can also work against you just as powerfully. And when your money is exposed to the volatility of the market, negative return years and losses can have devastating effects on your bottom line dollars. Let me give you an example. Let's say in a given year, your 401k portfolio within the market gains 60%. It's then followed up the next year with a 40% loss. Did you make money over that period? No. Yet many talking heads on Wall Street would have you believe that you netted 20%, spread across the 2-year period, so the market averaged 10% annual gains. But the reality is you lost 4% over that 2-year period because of negative compounding. Let's look at a simple example. Say you started year 1 with $100 in your account. You gained 60% and ended the year with a $160 account balance. That's the balance that you start with in year 2. You lose 40% of $160 in year 2, which is $64, ending the 2-year period with a total account balance of $96, losing 4%. That is compound interest working against you in negative compounding. Exposing your money to market risk and volatility can have devastating effects to your bottom line dollars when you experience losses in negative return years. The effects of these losses can be especially crippling in the later years of your working career when you're close to retirement. How can you expect to plan for retirement when you don't know how much money you'll have to start with? Issue number 2, taxes. Your 401k or IRA or other tax-deferred assets do allow you to grow your money tax-free, but Uncle Sam will require you to pay the tax on that money when you eventually withdraw it in retirement. At what rate will you be taxed? Nobody knows. You'll be forced to pay taxes in the future at some unknown tax rate that you have no control of. And many experts predict that tax rates could be headed for dramatic rate hikes in the very near future for 2 main reasons. Number 1, our federal government is currently over $22 trillion in debt. And number 2, baby boomers. The largest demographic generation of our time, the baby boomers, are retiring at a staggering rate of 10,000 workers per day. They're removing themselves from the workforce and beginning to draw on government programs like Social Security and Medicare. And they're retiring at a much faster rate than they're being replaced with new workers entering into the workforce. How do you think our federal government will make up for this deficit? If you're like me, an increase in future tax rates seems almost inevitable. Our government will need the additional revenue just to remain solvent on their growing debt. So, while you're currently writing off your 401k contributions at historically low tax rates, you'll likely be forced to pay taxes at a much higher rate in the future when it comes time to take your income distributions in retirement. And an increase in future tax rates could quickly eat away at your 401k retirement funds much faster than you anticipated, potentially leaving you broke with many healthy years ahead and forced to go back to work just to make ends meet. How can you possibly plan for retirement when these future tax rates are unknown?
So What would you do if you were holding a live grenade? Would you throw it away as quickly as possible, or hold on to it and just hope that it doesn't explode? I'd like to show you how to completely avoid this potential looming retirement disaster. I'll show you how you can grow your money completely tax-free with no exposure to market risk, and provides you access to your cash anytime you need it, and pays you tax-free retirement income for the rest of your life, so that you don't have to spend the rest of your life working, and you have the time and freedom to actually enjoy your retirement, playing golf with your buddies, spending time with your kids and grandkids, and going on vacations whenever you like. Click the link, enter some information on the next page, and I'll create a custom video illustration to show you exactly what implementing this strategy could look like for you. I'll create your video illustration at no cost and no obligation. We won't be on the phone. I won't be looking over your shoulder. You'll be able to watch your video on your own time and then decide for yourself whether tax-free retirement income that pays you for the rest of your life may be a fit for you. So click the link. Thanks for watching. I hope you have a great day, and I look forward to creating your video illustration.